JP Morgan stock just hit a 52-week low. Are we stepping in and buying the dip on JP Morgan stock? What is going on, investors? Hopefully you guys are doing well out there. We're going to kick off earnings season again here on the channel by taking a look at JP Morgan, which reported their Q1 earnings before the bell. And we'll get into these numbers. We'll take a look at it from kind of a firm-wide thing, and then we'll also look at it from the individual business segment that JPM operates under. And this is not only to give us a view kind of into JPM, but also gives us a view really into the economy, the consumer, into businesses. I really like taking a look at these banks this first week of earnings season. Then we'll come over here and look at this from a technical perspective, and this completely is broken down. There was two areas of support that we've identified with JPM, and we're just slicing through this like a hot knife through butter. We'll talk about that here in a second as well. So like I said, right in the beginning, the stock, right when they reported those Q1 earnings this morning, it touched a 52-week low at about $126 per share. We're up fractionally from there. We're bouncing a little bit. I am recording this during the regular trade. There's some time left, and so if you see price change by the time you watch this video, you'll know why. Now, let's jump into these Q1 numbers. Now, they did miss on that EPS side. They came in at $2.63 per share. That was a miss of about 7 cents. The revenue did beat expectations, but just marginally, up about $170 million. Revenue coming in at $30.7 billion. Now, that is down. Yeah, you're down 5% year over year on that revenue side. Talk about that more here in a second. Now, buried in this press release, you got a little $30 billion. Yeah, just $30 billion buyback on this one. Okay, look, you've got a market cap of $390 and you've got a buyback coming in at $30 billion. That is very significant. And so when we talk about this from a technical perspective, I'll be honest with you, I don't think companies do that great of a job buying back their shares, but I have a little bit more confidence in bank stocks like this that have a bunch of investment bankers in there that know the market and stocks far better than maybe like an Apple or a Nike buying back their stock. So we'll talk about that. Maybe JPM has some really strategic ways to buy back this stock in the coming weeks and months ahead as we look at this from a technical perspective. But I want to jump into these Q1 numbers. So here's our revenue coming in at that 30.7. We talked about, here it was on the press release, 30.7. Here's our Q1 right here, $30.7 billion. Now, quarter over quarter, so from fourth quarter into first quarter, we actually increased by about 5%. So you went from 29.2 up to this 30.7. But year over year, which is really how most investors are going to look at this, you went from 32.2 down to this 30.7. So that was a decline of about 5%. Then when we come down to the operating expense here, which is our non-interest expense, that came in at $19.1 billion. You see that is up not only quarter over quarter, but year over year as well. You were sitting at 18.7. So you're up 2% on your operating expenses year over year and 7% quarter over quarter. That is really going to shred your net income. But before we get to that, we've got these provision for credit losses. If you've been following the channel, you know during the pandemic, all the major banks set aside lots of money because they thought people were going to default on their car loans, their home loans, their business loans. Well, what ended up happening? We got PPP loans, we got stimulus checks, we got all this money flooding into the pockets of consumers. So they set aside all this money over at JPM only to release it back into the company. And when they release it back into the company, it flows all the way down to net income. It's like just straight into profits. And so you notice in Q1 of last year, they released $4.1 billion. When you have parentheses around that, that's actually releasing money back into the system. So that really bolstered our net income. Look at our net income. It was at $14.3 billion in Q1. Notice in the fourth quarter, so last quarter, they actually released $1.2 billion. Again, that bolstered up our net income. Well, what happened in this quarter is JPM's pumping the brakes a little bit. They're a little bit worried about this economy. They're worried about inflation. They're worried about the war in Ukraine and Russia. And so they're pumping the brakes on the economy. And so they actually set aside $1.4 billion. So when you have a little bit lower revenue year over year and increased expenses, and not only that, you set aside more money than you did last year, well, your net income is going to get obliterated. Look at this, $8.2 billion. Last year, we're sitting at 14.3. That's a decline of 42% on that net income side. Again, even quarter over quarter, you went from 10.4 down to 8.2. That's a decline of 20% on that net income side. That is why JPM is struggling a little bit from a valuation perspective. Now, when we come into the CCB, this is the consumer and community banking. This is your typical kind of bread and butter mom and pop family that's doing banking over at JPM. Your home loans, your car loans, your credit cards. That is all this stuff encompasses. It is one of the biggest segments that they have. So we had our net revenues coming in at $12.2 billion. You see that year over year, it's a decline, and even quarter over quarter, basically flat from a rounding perspective, but it is down as well. Some kind of macro economy stuff that we can look at as well. Home lending, despite the record home prices, notice that our home lending year over year is down 20%. You went from 1.4 down to 1.1. It's not necessarily a sign, but this could be a sign that the high prices are starting to get rejected. You also have card and auto. What has also been going through the roof is car prices, okay? You also went down from 5.4 down to about 5. Again, another maybe anecdotal data point, but that could be that auto prices, home prices are starting to get too high. The inflation is starting to take its toll. People are rejecting those high prices. We're starting to see a little bit of evidence here as well. Now, when we come down here to our non-interest expense, it's relatively in line quarter over quarter, up 7% year over year. That shreds our net income, okay? Because we also have these provision for credit losses. They set aside $678 million. That's versus a credit of $1 billion in the fourth quarter and over $3.6 billion in Q1. So you notice we went from $6.7 billion in net income all the way down to about $2.9 billion. That's a decline of 57% year over year and 30% quarter over quarter. We talked about how this company is just getting shredded because their non-interest expense continues to increase. Okay, labor expenses, all those types of things getting a little bit more expensive. And we're also seeing demand on the lending side start to shrivel up just slightly. Now, on the corporate side, again, quarter over quarter showing a little bit of strength, but year over year, we're seeing a little bit of weakness. On that revenue side, we went from 14.6 down to 13.5. Again, this is on the corporate and investment bank side. So we're down 7% on the revenues there. Same story as the firm wide. Okay, our non-interest expenses are starting to tick up to $7.3 billion. That's up about up fractionally over a year ago, but up quite a bit quarter over quarter. You're up 25% from quarter 4 to quarter 1. Now, in terms of net income, again, we set aside $445 million for credit losses. That is a complete opposite of where they've been in previous periods where they've actually released that money into the system. So we went from $5.9 billion on net income all the way down to this $4.4 billion. That's a decline of 26%. So we're seeing net income just shrivel up over at JPM. Now, on the commercial bank side, we're seeing just a very, very steady business year over year, essentially flat from a rounding perspective, down marginally quarter over quarter. The non-interest expense side is continuing to increase, up 17% year over year. And again, we set aside more money for credit losses that impacted our net income. In fact, it went under $1 billion for the first time on record here to $850 million. We're at $1.1 billion in Q1 of last year and $1.2 billion in Q4. Finally, we'll take a look at asset and wealth management. I tell you what, this is a bread and butter business. Look at a $4.3 billion worth of revenue. You cleared $1 billion to that net income side. So this is a fantastic business, but we are seeing similar type trends. Some marginal growth year over year, but rather significant expense growth. Okay, you grew your revenue 6%, but you grew your interest expense by over 11%. And then you also have these provision for credit losses. You actually set aside $154 million, whereas you released money into the system in the previous 2 quarters that we have here on record. That is going to hurt your net income. Again, 10% down quarter over quarter and down 20% year over year. All things being considered, when we're looking at JPM, this is a company that is starting to see the effects of the economy. Things are starting to stall here on this revenue side, and they are seeing a little bit of expenses on that non-interest side. Likely labor and employee-based expenses are ticking up. And then on top of that, we're starting to see consumers start to reject these high prices. And it could be that they're not even rejecting them. It's the fact that they're paying $6 a gallon for gas out here in California. And so they can't afford to buy a new car. They can't afford to go out and buy a new home or refinance or do all those types of things because they just simply don't have the money to do that. Now, before we get over and look at this from a technical perspective, I do want to balance it out with one more traditional financial metric that I look at whenever I look at banks. You know me here on the channel. I'm not always pulling up price to earnings, not always pulling up price to sales. But when you look at a bank, the price to tangible book, which is essentially if you were to liquidate JP Morgan, if they had to sell the company, this is the value of the assets over at JPM and what you are paying from a premium perspective. And we see right now we're paying 1.8 times tangible book on this one. And I have a 10-year chart over at JPM. And I think broadly, what draws my eye to this one is this 1.5 to tangible book. When JPM hits 1.5 times tangible book, that is when people tend to accumulate this stock. And so we'll keep that in mind when we look at this from a technical perspective, because this thing's got to still come down another 5, 6 to 10% before we reach that 1.5 times tangible book on this one. And from a technical perspective, this one is looking really, really bad, okay? Because what has happened is we have made a series of lower highs all along here, okay? A group of highs up here, lower grouping of highs, another lower of grouping of highs. Now, what you wouldn't want to see happen is what is actually happening today. So we actually have a previous cluster of lows right here at about $127 per share. As the stock starts to dip below that, you are confirming that this downtrend is just simply intact. Now, JPM stock continuing to go down is not necessarily a bad thing, but let's take a look at this from a technical perspective. You see that we are breaking this level right at 130. I had that level marked out for a long time because it was kind of the previous highs made in 2020 before the stock, like a lot of stocks, really went down in that early March timeframe and then just rallied hard. We've essentially given back a lot of those gains and we're basically back where we were in 2020. What I notice underneath the $130 price range is we have a lot of gaps and a lot of thin candles. And so that's what has me a little concerned that this downtrend is intact and is likely to continue. Now, how do you know that this downtrend is over? Just like we've talked about here many times here on the channel, you're looking for green candles up and over this downward trend line. You put up a couple of green candles over this trend line and it's showing you that some buyers have stepped up. Now, in this area of 130, I would expect some buyers to emerge, but I tell you what, if they don't, much lower prices coming for JPM. I mean, we're talking, I don't see a clear area of support for this one until you get all the way down to about $105 per share. That certainly would take it into a range from a traditional valuation perspective. That would be a smoking hot deal. And from a technical perspective as well, I think it would be an interesting deal as well. Also, keep in mind when we're talking about price to tangible book, that's based on the book of business now. If the economy starts to turn for the worse, and certainly if you read some of Jamie Dimon's commentary up here, they're worried about the economy. They're worried about the war in Ukraine. They're worried about inflation over at JPM. And certainly the more worried they get about that type of thing, the more that stuff sets into the economy, the worse and worse JP Morgan business starts to get. And that certainly will impact their valuation as well. Certainly investors are weighing this as well, and they're starting to sell or essentially taking profits on this stock. Me personally, I would love to buy more shares of JPM. I've already been in this company for a little while. I've been reinvesting those dividends. We've got that $30 billion buyback. I would expect some demand to appear for the shares, but we are going to wait until we see some kind of a reversal on this one. Otherwise, we're just going to let it fall down into an area of support, because right now, yeah, you could technically, if you wanted to step in at this area and buy it, you could, but you're essentially catching a falling knife, which is really one of the biggest mistakes investors can do. Instead, I'd like to see this one continue to pull back. If it continues to pull back, I think you could accumulate it at a lower price and be a little bit more confident about your buy. Not only that, get it from a better valuation perspective as well. If we do reverse here, we do have some overhead resistance up here at 142. That was a clear area of support for a while. And so even if you miss this one, I don't necessarily see this one just snapping back and rallying hard all the way back up to highs. So even if you miss, I think this is all things being considered. You can be patient on this one. You can drip into this one. You can dollar cost average into this one. I wouldn't be in any hurry. I would not also build a full position. If I wanted 10 shares of JPM, I would not be buying a significant amount of that at this level, because I think the higher probability is this trend continues. We continue to pull lower. At some point, that $30 billion buyback and certainly the dividend yield over at JPM will start looking more and more crispy. Currently, it's sitting at about 3%. This thing could go much higher if the technicals play out on this one. I think JPM will be a great buy here in the near future, just not necessarily today. That was JPM. We'll be back with more bank stocks all this week here on the Investor Channel. Good luck with your investments.